Welcome back to new session. This is your trainer and PMP coach Anand. My goal is to help you pass the PMP exam and be a part of your exciting PMP certification journey. This is continuation of cost management knowledge area. In this session, you will learn determine budget process. Before you start, request you to subscribe to this YouTube channel. The learning objective of this session are: we will start with the process overview, followed by a process definition. We'll also differentiate between estimate cost process, which we just learned in previous session, and determine budget process. We'll go through input tool techniques and output, discuss funding limit reconciliation, cost baseline, and project funding requirement. And at the end, we will have a quick recap. We have four processes in project cost management knowledge area: plan cost management, estimate cost, determine budget. First three processes are under planning process group. The focus of this session is determine budget process. With this process, we will complete the cost planning. And the last process is control cost, which is under monitoring and controlling process group. Let's look at the process definition. Determine budget is a process of aggregating the estimated cost of individual activities or work packages to establish an authorized cost baseline. Cost baseline is approved document and cannot be changed without approved change request. Project performance will be monitored and controlled against the cost baseline. There is the question with a lot of students that both processes, estimate cost and determine budget, look similar. Why they can't be clubbed together as one process? Well, even though some of the activities look similar, the intent of both processes are entirely different. Estimate cost process is all about estimation of activities. Major focus is on estimation. Also, there will be aggregation at work package level or higher level in WBS and estimation of contingencies. Project team is involved in these activities. Whereas determine budget is about project level aggregation, getting funding approval based on the agreement or availability of the funds within the organization, and finally ensuring management agrees on the cost baseline. Mostly, you work with the management to get this process done. For example, you will discuss with the finance director to check if they will be able to process the invoices as per project cash flow. Estimation process will be done frequently in the project. However, determine budget process will be done only when additional funds are required or payment milestone or cash flow is changing. We will touch base the differences once again at the end of this session. Let's look at the input, tools and techniques, and output. Inputs are project management plan, project document, business document, agreements, enterprise environmental factor, and organizational process assets. Project management plan. The component of project management plan that will be input to this process are cost management plan, which gives a guidelines on how to execute planning processes, including this one. Resource management plan provides information on the cost of resources which are needed to estimate the overall project budget. Scope baseline. This consists of three documents: project scope statement, which breaks down the scope from the level of requirement discussed in the initial phase of the project to the level of deliverables that will fulfill those requirements. Work breakdown structure. It breaks down the scope from the level of deliverable to the level of work packages. And WBS dictionary, this will contain information about the work packages. So this will be updated with the cost estimates as a result of this process. Other inputs are cost estimates. This is the output of estimate cost process and is a key input to determine budget process. Cost estimates for each activity within a work package are aggregated to obtain cost estimate for each work package. And the further work packages are aggregated to get overall project budget. Basis of estimate. It provides all underlying details about how the estimation were done. What are the assumptions related to activities? What are the constraints? This will be useful to decide whether some of these costs should be included in the budget, particularly if there are indirect costs. Project schedule. This is output of develop schedule process. It contains planned start and finish dates for the activities and work packages. It helps in identifying calendar period of a project cost, so helpful to develop the project cash flow. Risk register. It contains information on the cost of risk responses. Project manager should examine all cost and schedule related risk before finalizing the cost baseline. Another important input is business documents. These are documents created before the start of project. These are pre-project document. First one is business case. It provides the justification for initiating this project. It includes the financial success factors for the project. For example, return on investment, ROI, milestone, assumptions, constraints. Next, you have benefit management plan. It lists the benefits of the project which will be realized as a result of a project. It may include details about target benefit, how to measure this benefit, who will benefit, and so on. Now, both documents are critical to get a business buy-in. For example, when you go to finance director to get your cash flow approved, you can go with the approved business case so that you can persuade him to give you required cash flow. Agree on the required cash flow. Agreements. Agreement is the generic PMI term and may represent contract between the company and the vendor. Now, vendor is the one who is providing resources, product, material, or services. So agreement provide information about contracted resources cost, example human resource cost, equipment cost, provide payment milestones of each contractual agreement. So these payment milestones are very important to create the cash flow, which is important to finalize the cost baseline. Note that project can have more than one agreement within the one project. Agreement can be a phase specific or agreement can be for entire project. Enterprise environmental factor. Now, one of the key enterprise environmental factor that you have to be careful about is exchange rate. For large scale projects that extend multiple years with multiple currencies, it may be necessary to refer to exchange rate so that any fluctuation in those rates can be considered within your project's cost baseline. Organizational process asset will help you to determine the budget. Now, some of this asset may include existing cost budgeting related policies and guidelines. So when you are determining the budget, you will refer to existing policies and follow them. Cost budgeting tools. So any software tool your organization might be using, sometimes you have to raise a certain requisition within the system, so you can do that. Reporting methods. So which stakeholder will get what kind of reports in what format, how often. So all that information will be available through OPA. Historical information from the past project, past similar project, and lesson learned repository from a previous similar project. So we talked about various input which will help you to determine budget. So what kind of a tools and technique we will apply on these inputs? So let's take a look at this. So we have expert judgment, cost aggregation, data analysis, historical information review, funding limit reconciliation, and financing. Let's look into each of them. Expert judgment. Experts are important in determining the project budget. Experts with experience in application area, knowledge area, discipline, or industry will work with the PM. For example, while determining the cost of green building construction project, expert in the field of green building will be able to optimize the construction cost. Expert will be required if funding is coming from other sources. So expert with the knowledge of financial principle, funding requirement, and funding sources will be used on the project. Project manager may apply experience and information from prior similar project, maybe within organization, maybe from some other outside benchmarks. Expert may include consultant, SME, or financial expert. So, in nutshell, all these experts will help you work with a project manager to determine the project budget. Cost aggregation. It is accumulation of cost based upon WBS structure of your project. As shown in the diagram, individual activity cost will be rolled up into work package and work package into control accounts and control accounts into a project budget. There is always less clarity on link between control account and cost aggregation. So let's understand this through an example. What is a control account? Control account is a management control point where scope, cost, and schedule are integrated. It is created based upon management needs or recommendations. Think about a CRM project which is funded by 3 business units, but they want to fund respective functionalities. So there are 3 distinct functions: call center, contact center, and CRM software system, and each business unit want to track its own funding. So the control accounts are placed at the selected management control point in WBS. Each control account is assigned a unique code which can be linked to accounting system. This accounting system linked we discussed during the cost management planning. As funds will be utilized for each function, respective business unit can have a view of what was approved versus what has been utilized. Financing. Financing means acquiring funding for the project from external entities. For example, financing from bank or from investment group or maybe from government for public-private partnership projects. Project examples are long-term infrastructure project like national highways, industrial project, public service project like a metro in city. If a projects are funded externally, then funding entities' requirement should be met. So we will need to constantly provide them a report, constantly fulfill whatever the stakeholders' requirements are. For example, if a World Bank is funding the metro project, then there will be some funding requirements as per the agreement with the World Bank, and appropriate requirements has to be fulfilled throughout the course of project. Historical information review. It assists in developing parametric or analogous estimate. Basically, you are referring to a past project budget, cash flow, payment milestone, funding patterns, etc. And using that information, you are trying to finalize the project budget. You may use this technique for a certain work packages or for entire project. Based on historical data, project characteristics or parameters will be identified and used to develop the mathematical model so that you can predict the total project cost. The accuracy of estimate becomes reliable when you have accurate historical information, quantifiable parameters, and models are scalable, which means models will be developed through certain sophisticated algorithms or using software tools. Let's understand example. So in simple model can be home construction project where cost per square meter is used as a parameter. In a complex project like in a software development, model can be complicated with multiple parameters. So multiple adjustment factors are used and each has a numerous points within it. For example, code, integration points, number of integration, function point, number of system it is integrating with, data migration requirement, and so on. Data analysis. Reserve analysis is a technique of analyzing contingency and management reserves to deal with the risk. There are 2 types of reserves. Contingency reserve. It is a budget within a cost baseline that is allocated for identified and accepted risk, which is known unknowns. And management reserve, reserve for unforeseen risk, unknown unknowns, related to the work that is within the scope of project. We already talked about these techniques in detail in estimate cost process. Now, one of the questions you will have is if we had already used this tool and techniques during cost estimation, why we are using it once again? So, well, the answer is during determine budget, you will once again revisit these processes so that if there are any alignment, Yeah, if there are any possibility to further optimize the contingencies, that can be done over here before you finalize the cost baseline. Funding limit reconciliation. Let's understand this tool and technique through an example. You are assigned a project with a budget of $400,000. Does it mean you will have $400,000 to spend on day one? Of course, no. Each organization have their yearly budget and funds are made available each quarter, and hence finance may put constraint on the project's expenditure, especially if you are asking entire budget upfront. For example, finance department may say, we have 400,000 for your project, but you can get only 100,000 in each quarter. The expenditure should be reconciled with any funding limit on the commitment of funds for the project. A variance between funding limit and planned expenditure, this will sometimes necessitate rescheduling of a project activities, especially when these activities are linked to payment milestone. This is accomplished by placing imposed date constraint on respective activities. Imagine project is under execution and you already spent 110,000 in quarter 1 and 115,000 in quarter 2. So project is moving fast and ahead of a schedule, hence spending is more than planned. As a project manager, you may be happy about the progress of project. Your business unit, who is a user of this, also might be happy. But finance department may not like this, as you are asking them to clear more payment than what was agreed in the cost baseline. So in such a situation, you may reschedule the work and slow down. So we talked about all the tools and techniques under determine budget. The output of this process are cost baseline, project funding requirements, and project document updates. Cost baseline. It is approved version of time phase project budget, including contingency reserve. As you can see in the picture, cash flow is also a part of cost baseline. Cost baseline can be changed only through a formal change control process. Cost baseline is used as a basis to compare plan to actual expenditure, especially while analyzing the cost performance of the project. In large project, organization may use multiple cost baseline, especially one for each phase of the project. Let's look at the component of project budget. This diagram taken from PMBOK illustrates various components of a project budget. Cost estimates for the various project activities along with contingency reserves are aggregated into their associated work package cost. Work package cost estimates along with contingency reserves are aggregated into control account. Summation of all control account make up the cost baseline. Management reserves combined with the cost baseline gives your overall project budget. Project funding requirement. Again, I am going to use a diagram from the PMBOK to illustrate this concept. So you can see a dark line representing cost baseline. Total funding and periodic funding requirements like monthly, quarterly, annually is derived from the cost baseline. Funding requirements are decided based on mapping with the project schedule. So cash may be required on completion of certain milestones or phases of the project. So the cost baseline can determine when project needs a cash. It is also called as budget at completion. Funding occurs in incremental amount. Now these are not continuous and evenly distributed. These are shown as the steps in the diagram. They are also sometimes called as a step funding requirement. In simple word, it represents project's outward cash flow. Expenditures are tracked against the cost baseline. So as and when you are clearing, you are paying the invoices, so those expenses will be tracked against what was agreed in the cost baseline. The total fund required include cost baseline and management reserve. So funding requirement also include source of funding. Now remember, What we had seen in the cost baseline, we said in a cost baseline you will have a project cost plus contingency reserve. It doesn't have a management reserve. Whereas the total funds required for the project, a project budget contains cost baseline plus management reserve. Project document updates. So cost estimates are updated to record any additional information that you might have gathered during this process. Project schedule also get updated. So estimated cost for each activity may be recorded as a part of project schedule. And finally, you also may update risk register. You might have identified some new risk during this process, the funding related risk, the finance related risk. So at the end, either you may update some of the risk, you may add a new risk to risk register. It's time for a quick recap of what we had learned so far in this session. This session was all about determining budget. So the key focus was on creating cost baseline and getting it approved from respective stakeholders. We started with overview and process definition, discussed various input tool techniques and output. We talked about funding limit reconciliation and project financing, cost baseline, and also discussed project funding requirement. Great job. See you in the next session, that is control cost.